And according to research, study shows that up to 90% of traders lose money just because they don't know how to read market structure. And it's quite funny because market structure is one of the most easiest subjects when it comes to trading in general, and that is the reason why I'm making today's video, to teach you how to read and understand market structure. And with that being said, let's jump right into my screen and I'm going to break down market structure to you step by step. So by the end of this video, you're going to understand what market structure is and how to use it to scale up in your trading game.
All up in my pack, we not the same, nigga. Gang members walk them down just like painkillers. Ripping white up on the stove with them gang members. Snakes up in the grass, I'm not friendly, we can't hang with you. Smoking woods back to back, I can't flame with you. I'm like Floyd throwing punchy jabs, we can't bang with you. Undertaking, slamming shit, be like Kane, nigga, capitalizing.
So before we dive deep into market structure, I'm gonna break things down as simple as possible so you don't get confused at any stage of the journey. Now, what is market structure? Market structure basically is just simply how the market moves. So you see this market moving up and down, sideways, up and down in different directions, and then you get confused. There is no confusion there when you get to understand what market structure is. Market structure is basically how the market moves, and there are three types of market structure. We have uptrend, we have downtrend, and we have consolidation. Let's open my chart and I explain this quickly. So we're going to start with the downtrend. Yeah, whenever you see a downtrend, this is what it looks like. Price moves downwards. So when you see price moving downwards over a period of time, that period is called a downtrend. So we can see that price was in a downtrend for that period of time. So when you see price moving towards the downside, that period that it moves towards the downside is called a downtrend. And it's vice versa for the uptrend. When you see price moving towards the upside for a period of time, a particular period of time, we call that period an uptrend. So when price is moving upwards over a period of time, we say price is in an uptrend for that period of time. And the last one is consolidation. Consolidation is not really confusing, but most people complicate consolidation a little bit. When price doesn't have a clear direction, it's not really going up, it's not going down, it's just moving sideways or ranging within a particular area. We call that area consolidation area. For example, on the chart, we could see that price moved upwards, downwards, upwards, downwards, no clear direction to tell us that it's going an uptrend or downtrend. It would go up for a particular period of time and then come down. It would go up and come down, go up and come down, basically ranging within that area, going sideways. That area is called consolidation. So uptrend is a period of time where price is going towards the upside. Downtrend is a period of time where price is going towards the downside, and consolidation is a period of time where price is just going sideways. So another name for consolidation is called ranging market, because price is just going sideways, no clear direction during that period. And as a trader, this is like the first step to the basics of market structure that you should understand, so you don't get confused whenever you see the charts moving in a certain direction that they move. So one thing you should know before we move into the next phase of this lesson is that whenever price is in an uptrend, we call that a bullish market, and whenever price is in a downtrend, we call that a bearish market. So there are three types of market structure: uptrend, downtrend, and consolidation. Uptrend is a period of time where price is moving upwards, that's a bullish market. Downtrend is like a period of time where price is moving towards the downside, that's a bearish market. And consolidation is a period of time where price is just moving sideways, so it's not going up, it's not going down, it's just ranging within that area. That's a consolidation market. Now that you've understood the basics of market structure, the chart is not going to be looking so confusing to you, because you now know that price moves in three ways. It's either up, down, or sideways. With that being said, let's move on to the next phase of this lesson, which is highs and lows. Now you might be wondering, what does highs and lows have to do with uptrend, downtrend, and consolidation? It has a lot to do with these three types of market structure, but we are going to start from the uptrend, and I'm going to draw the uptrend structure, then we explain the highs and lows for the uptrend structure, the downtrend structure, and the consolidation. Now when price is in an uptrend, you see that price is going to be moving in ups and downs, ups and downs, ups and downs, ups and downs, and it keeps going on and on. Now these ups and downs are called highs and lows, highs and lows, highs and lows. Now we have this high, we have this low, we have this high, we have this low, high and low, high and low, high and low. Now what we notice from this uptrend is that the highs keep getting higher and the lows keep getting higher as well. Now this high is higher than this high, this high is higher than this high, this high is higher than this high, this low is higher than this low is higher than this low, and it keeps going in an uptrend. So in an uptrend structure, the highs are higher and the lows are higher. So when we have an uptrend structure, we can say we have higher highs and higher lows. because we have highs and lows, and the highs are higher than the lows are higher than the last. So we can say in an uptrend structure we have higher highs and higher lows. Now bringing it to the downtrend structure, let me draw that real quick. We have this as the downtrend structure. What we notice is that the highs keep getting lower and the lows keep getting lower as well. We have lows and highs, lows and highs, lows and highs, lows and highs, and it keep going. What we notice is that the highs keep getting lower and the lows keep getting lower as well. So in a downtrend structure we have lower lows and lower highs, because the highs are getting lower and the lows are getting lower as well. So in an uptrend structure we have higher highs and higher lows, and in the downtrend structure we have lower highs and lower lows. Before you understand higher highs and higher lows or lower highs and lower lows, you first have to understand highs and lows. So in an uptrend we have highs and lows, highs and lows. We can notice that the highs keep getting higher and the lows keep getting higher as well. So in an uptrend we have higher highs and we have higher lows, and in a downtrend we have lower highs because the highs keep getting lower, and we have lower lows because the lows keep getting lower. Now to explain highs and lows for the last type of market structure, which is consolidation doesn't have a clear direction. Price is just going sideways. Now for consolidation it's a little bit confusing, but it's understandable when you have experience in this space, and you will have that very soon when you join Melo FX Academy, where we train students from being a complete beginner in forex trading to being a total professionals when it comes to forex trading. The link is in the description to register at Melo FX Academy, and I'll see you there and train you from scratch to becoming a profitable trader. Now back to what I was saying. In consolidation we have equal highs and equal lows, or the highs are not that equal, they are kind of like disfigured, and the lows are the same way, but you have an idea, a clear understanding that price doesn't have a clear direction. So when you see a consolidation, it must not be perfect equal highs and perfect equal lows. The highs and lows might differ, but you know that price is going sideways without a clear direction. So when it comes to consolidation, the highs sometimes are equal, the lows are equal, or the highs are disfigured and the lows are disfigured, but you have a clear understanding that that's a consolidation area. I'll show you an example so you don't get confused. Now, so this was the first example of consolidation that we drew at the beginning of this lesson. Let's redraw that again. Now if you notice, this area doesn't have a clear direction. You see the highs, you see the lows, you see the highs, you see the lows, you see the highs, and see the lows, highs, lows, highs, low. You see that it's just disabled. The highs are disabled, they are not equal, then and the lows are not equal as well. So in a consolidation area, the highs sometimes are equal, the lows are equal as well, or the highs are disfigured and the lows are disfigured as well, but you have a clear understanding that market is ranging sideways. It doesn't have a clear direction. A clear direction of an uptrend, you will know that price is going towards the upside. A clear direction of a downtrend, you will know that price is going downwards. But when it comes to consolidation, don't be confused about consolidation, because most beginners usually get confused. Let's find another consolidation area. Now if you check out this side, price consolidated for a little while before moving towards the upside, but then we had consolidation area here, because in this particular area price was just going sideways. So it was not going down, it was not going up, just sideways. There is no clear downtrend in this area or uptrend, but then price was just going sideways before price started to move towards the upside. That's an uptrend. But then consolidation, I just want you to have the idea that consolidation must not have equal highs and equal lows. Consolidation can have disfigured highs and disfigured lows. With that being said, I believe you've understood the basics of market structure, the three types of market structure we have, and highs and lows. If you've understood this lesson so far, it means you can be able to tell the direction of the market, what trend we are in, whether we're in an uptrend, downtrend, or consolidation. And it's safe to say that you are no longer a total beginner when it comes to forex trading. We've come to the end of this lesson. I'd like you to hit the like and subscribe button, because I'm going to be dropping more bangers like this. This is only the part 1 of how to read market structure for total beginners. There is part 2 coming, where I teach you change of character, break of structure, and so on. But stay tuned, hit the like and subscribe button, comment what's frustrating you the most in trading, and I might make a whole video just for you. I'm gonna see you in my next one. Peace.